In the meantime, oil, I want to show you a really cool chart. That was a high conviction, you know that, right? But it tagged the first time, you can't even see it here, and then it bounced, and we were talking about, okay, where is the, the stop? Well, look at that. Look how quickly that died. By the way, did the same thing on this day. It dumped, and then it went right back up to resistance. I said it has to stay above 70. It did. Had another green day. It was actually a green day that dumped, sat on that level, and it looked like it was going to have, a big move. It did all the way back up, but couldn't get above 68.5 and came crashing back down again. That has been a very nice high conviction short. XLE is following a little bit later. In other words, that was a gap fill. We had a bounce, couldn't get above 88 and then took it back out again. So just be careful. I don't think that one's done. Okay, an itty bitty little oil bounce, but you know how I feel about this, right? So we had a very, very nice breakdown. Period, end of point. Okay, so a little digestion period here would not surprise. I still see it going over. That was a really, really nice below 70. We're already at 65. XLE short looks phenomenal. Nothing wrong with this chart, and oil short, and I don't know about nat gas. I'm out. Like, I can't predict that one. It's already on 822 and it still doesn't roll. It hasn't popped. Oh yeah, I think we could absolutely roll over hard with profit taking going on. Yep. It has it's just a probability tell that the next candle will be bullish or bearish. It doesn't mean a trend break. There are other patterns for trend breaks. An evening star reversal is very bearish, which I said this was starting to form. It just needed to break 88, come back down to 87. We'd be on our way to 83. 83 is very important, etc. Also very bearish, this shooting star and then a gap down. Well, obviously we had very strong follow through. You'd have to show me a week. Anyway, the point is, it's just a higher probability bet for lower. It's my pattern recognition that I've seen it before, and oftentimes it's it works. So yes, let's XOP these oil and gas exploration plays. It's still big a chop. 132 needs to break down. OIH. Just starting to get a little punky here. XLE has a lot of Chevron, Exxon, and the majors. So that was my cup of tea here. We'd head back down to this 83, take it out and head back basically to 82. And it's working. So here we are. If you're just looking on the hourly, 84.69 needs to break. That's, I think, better than OIH, but OIH hasn't even started yet, really. Okay, so this is crude. Okay, West Texas, WTI, faltering. And this is New York Harbor, ULSD, falling. As this falls, refiners get hit. I just, work with me. Just work with me. So we have a bigger risk here. I would say this price target comes into view, 260. Shorting the refiners into that level just makes a lot of sense. A lot of sense. Anyway, that is a very massive print, no question about it. So SPX is retesting 4,100. We're not really falling apart. Oil continues to be very, very weak. USO is that 63.81. That was price target. Do you remember this head and shoulders, Kevin? So adding it now is, I don't know if you're in it or what, but just be careful. That was the head and shoulders, left shoulder, head, right shoulder. I said it has to stay below 70. This was also, by the way, that's your bearish engulfing. So the probability of it following through is very high. That's all that bearish engulfing means. And I said, as long as it stays below that 70, we should be fine. All right, it hit 67, had a very strong bounce, and then kaput, and here we are, 64. Are we done with this trade? No, I don't think so. I don't think so. next level would be, I need to bring this up. We hit the apex. You just got to be careful because we're coming into an area where we have obviously bounced before. So that's a morning star reversal, for example. And so the probability was higher, but we came back and filled the gap. So anyway, 63.81 really needs to break down. More of the action is happening in the reflation trades, energy, which by the way have come right back down. And we did break that trend line. That was my baseline bet. Here was that literally dotted green line. We tagged it and bounced into the underside. So I'm expecting the next weakness to occur. All this just basically means, inflation expectations haven't fallen drastically lower. Shelter, used cars, all that stuff. Energy is basically coming down a little bit, but still staying big picture sideways. That's kind of the name of the game there. Anyway, we're having an itty bitty little bounce. Same thing, XLE and refiners and the rest might have a little stabilization today, but it's not my baseline bet. Lines have been broken. We have lower levels to hit. Lines have been broken. We have lower levels to hit. Yeah. USO, where do we bounce to? 63.81 perfectly. I mean, just really. Here's your trend line. We took it out. Doesn't look like there's any support here, but there is on a daily. That's why I use all 3 time frames. But it totally looks like, a short the rip once again. So far, it has been very much. Look at the head and shoulders here. Same thing identified here. I said, as long as it stays below 70, you should be fine. It broke beautifully. And it's just making, very, very small bounces. That got dumped. That actually got defended pretty well, but it's still lower highs. This will probably make it into that trend line. It could even tag really quickly, that 67, but it's still underneath the fold. So I thought the energy sector would start rolling over in December. We had a one and done, and then it climbed right back up, and now it's intonating again. So what I think is happening is we got reflation trades getting hit.